Hey, hi, I'm back. My name is Kaushik Chatterjee. As you know, I no need to introduce again about myself, right? So, in this video, we are going to discuss about FD, the fixed deposit. I think earlier my all videos you have gone through, and if you have not gone through, just go through. So, I'm just going through all the financial, planning, even what are the tools, what are the aspects, what are the instruments. So today's video we are going to discuss about FD. Now by name itself you understand this is all about a fixed deposit, right? So amount what you are going to put, it will be fixed for certain XYZ years. Now I'm just going to discuss how we are going to understand the concept of the FD, how it is going to be workful. Let's say if you are going to use this instrument, and what are the benefits and what are the pros and cons even of this. So that we are going to discuss on this, right? So starting with FD, as I told you, fixed deposit, and this is all under, let's say, by all even Reserve Bank of India. So I'm talking about India, it is all about Reserve Bank of India. So banks, it can be even a private bank, it can be even a government bank. So as you know, in my earlier videos also I have already even discussed, there is a governing body even taking care by Ministry of Finance and Government of India, right? So any bank, it could be even a private bank, it could be even a government bank. So the authority, the governing body of all the banks is RBI, is a Bank of India. So wherever you are keeping any money and the governing body is RBI, so your money is safe. Let me tell you very frankly, and let understand this point first. So if I'm going to keep even X bank, even it is a government bank, if I'm going to keep even Y money, even it is a private bank, so people have a different thought, right? Some people will think, oh no, private bank, that can be happen anything, that could be even based on their wish and will even they will go. No, absolutely no. So let me educate you first, let me understand this concept first. If even it is XYZ bank, even private, even it is XYZ bank, even in government, even it is under RBI, where I'm investing, the money I'm going to invest under even RBI, so my money is completely safe. So understand this point first, right? Now fixed deposit, again, it will be fixed for certain years. So you can go for even, there are a lot of schemes. You can go for even 5 years, you can go for even 10 years, even in between any of the tier. But more than 10 years, currently there is no even fixed deposit are available. Even there is some term deposit also. During certain period, let's say it can be for 181 days, it can be for 290 days. Like this even some of the banks, most of the banks, not some of the banks, most of the banks even they will offer you, right? So you need to decide like which tenure I'm going to invest for this. It is for a long term. Let's say if I go for 5 years, let's say if it is more than that, if I'm going for even 10 years. Now what I meant to say, so I understood what is governing body of FD, I understood even where and all I can invest my money, right? I clarified like what is, how private bank works, even how a government bank works, right? Normally FD scheme, how it will be for a shorter time, even for a longer term, 5 years, 10 years, and there will be shorter term, as I told you, some of the term deposit also you can do this. Now the second thing comes to my mind actually, if I'm going for, even though let's say a shorter term, even though let's say for 5 years, 10 years, even a longer term, so how much money I need to keep and what rate of interest even I can expect. So let me first tell you about this rate of interest. See, rate of interest in today's scenario, even if you look out in 1970 onwards till today, I'm talking about India. So 1970 till even 2023 we are right now. So almost I can say it is 53 years. So if you look out the top and the bottom of this FD, it is almost even from 20%, 20% I'm talking. So there is a time 1970, even the FD rate was almost 20%. Now today if you look out, the scenario is somewhere around 7 to between 8, not even beyond that, or probably 6 to between 8, not even beyond that. Current, I mean last 1 year if I look out this statistic, in between sometimes it was 10, sometimes it was 12, sometimes it was 11, 9, 8, and it is slashing down. So now there's some people might be thinking, oh Kaushik, if I would have been done it on 1970, let's say I would have been got this 20% of rate of interest. So let's not think in that point. Whatever opportunity is gone is gone. Today also, if I feel no, it is a slashing down, even a 6%, 7% average if I talk, let's say, I'm not particular, all the banks even different rates will be there. I'm just giving a, let's say, a hypothetical rate of interest. So let's say, take an example of 7%. And I think I can even get even more money if I would have been paid even 10 years back. But you couldn't do this. So let's not think on that point. The fundamental of rate of interest, the interest will be always paid every year, calculative of your 365 days. So it will be applied for the term fixed deposit also, term deposit also, right? So if I'm paying for, let's say, 181 days, if I'm paying for 290 days or whatever scheme I'm just going to take, so it will be again calculated on 365 days and divided how many days when I'm keeping. So trying to understand, rate will be always calculated yearly, right? So based on that one I'm going to get. So if it is a 7%, 8%, 9%, 10%, 20%, whatever the rate of interest bank is declaring, it is on yearly, right? So I understood now how this rate also even going to work out. Now the second question again come to my mind actually. So how much corpus I need to keep, and what is the basic of my corpus I need to fix, even though if I'm doing a ideal even financial calculation. See, again I just told you even from the beginning, the purpose of this video is not like what I am going to say. The purpose of this video is with my experience, like 16, 17 years in financial experience, what I am captured, and that only I'm just sharing over here. So my ideas can be workful for you, and my ideas cannot be workful for you also. So you decide. You are the owner. You are the planner for this. I can guide you. That's what I told you, where to invest, how to invest, and what are the things you have to look out at, and how this term deposit works, how this longer even fixed deposit works, and what is the percentage of rate of interest fluctuated even since from 1970 till today if you look up. So up to here I'm clear. Now ideally if you ask me how much money I need to invest, so before that you need to calculate. Definitely I'm not going to talk about term deposit. I'm going to talk about only FD, which is minimum 5 years or 10 years. So let's say I'm just taking an example again for 10 years. So 10 years after, let's say, 10th year, today if I calculate it is 2023, so definitely this money I'm going to get, let's say, on 2033. Now first thing you have to calculate, in 2023 what I am going to invest in 2033, that money I am going to get, whatever XYZ rate of interest. Yes, but one thing I can assure you, today even though if you are booking, let's say, on 7%, even though it is 8%, 9%, whatever that particular bank is offering, that rate of interest, it will be there till your 10 years. There will be no change on this, because today whatever you have booked, it is booked for 10 years. So in between there is any fluctuating rate, your FD and that interest is not going to be affected unless you are not going to break that FD. I'll repeat it once again, unless I'm not going to break my FD, any emergency, any cash flow I require, any kind of medical urgency. So for this, let's say out of 10 years, I'm just going to break, let's say, for 3 years or 4 years or 5 years, whatever it is required, because that's most of the people that they use this just a ready cash. So ready cash means they feel, oh, I have a FD, so that I can break it. So what will happen? The rate of interest what you're supposed to get throughout this 10 years, that you are not going to get, right? So this is, you can say, a cons. Second, even though I'm breaking this FD before even my maturity of 10 years, so you have to pay some premature charges. And also there will be a calculation based on that, and bank will charge you, and almost you can say this will be almost a loss of 1 to 2%. Depends on what rate of interest you have booked and which year you are going to break this. So understand these are cons also. So I cleared this point also. Now come back to our part, like how much money I need to keep initially. Try to understand this money. It will be a bulk money. It will be a one-time investment. It is not like a recurring deposit. In recurring deposits, I'll just add it also here. There is another opportunity, you can go for recurring deposit. So recurring deposit, how it works? Every month you can pay even certain amount. Let's say there will be some post office scheme where even I think current scenario it will be around 500, right? So it should not be even below 500. It can be 5,000, it can be 10,000, it can be even 500 itself. That means I'm not committed. In RD, what is going to happen? Recurring deposit, I can start even with 500, I can go even beyond that, but I cannot come back even below 500. Every month, XYZ amount, whatever I have kept, that I need to put it in the RD account. And same, the rate of interest, functional things are same, there is no difference. That's what I just added this one. But in FD, what is going to happen? The lump sum amount you have to put it in one shot. If I'm planning for 10 lakhs, that 10 lakhs should be in one shot. If I'm planning for 10 crores, the 10 crores should be kept for one time. It is not like I'll keep it 1 lakh today and then next year 1 lakh. No, you can do this, but that will be a new FD. The same FD, it will not be counted. You can do this. Let's say today I cannot provide even 10 lakhs, 10 crores, whatever it is, whatever you are planning. So I can do 10 lakhs today. Remaining even 10 years, I can do every year 10 lakhs. So my 1 crore is done. So you can, that's what I'm telling. How much you need to give, that you need to decide based on your need. But how you can calculate what is the ideal investment I need to do, that you have to understand on 2033. That means your requirement will be after 10 years. On that 2033, because this is 2023, and let's say if I'm planning for 10 years, so 2033, what will be my actual requirement, and that requirement, if you look out my first even 2-3 videos, you will be able to understand. So I'm not going to explain over here, so you can go back to my previous videos, you will understand how you need to do the financial planning also. And this is just a part, we are talking about the instrument part now. Where an all instrument you need to invest. Clear? So now I'm just giving an example. Let's say on 2033, let's say my requirement will be somewhere around 20 lakhs. I'm just giving an example. So today I need to keep this money, let's say around 10 lakhs. That money, as I told you, on a simple rate of interest. And try to understand, every bank they will give you a simple rate of interest. So what is simple rate of interest? I'll also capture in this video only. I don't want to keep it a separate video for this. Simple interest is on your principal, whatever interest is coming. Very simple. So if I'm keeping 1 lakh, on 1 lakh 7%, it will be 1 lakh 7,000. Next year again, whatever I'm paying, or let's say third year, whatever I'm paying, based on that one, the interest will be paid on my capital. So here also in the same functional way, this is working for my FD. And that will throughout, it will be my 10 years, it will be on my capital only. So simple interest, I am clear, right? There will be another even interest part which I am not going to discuss here, that is called a cumulative or compound even interest. That probably for different even instrument it is going to work, so I'll discuss there only. But in FD, it is only simple interest on capital. XYZ interest I am going to get. Clear? So now 33. So I require 20 lakhs. And today let's say I am going to give even 10 lakhs. So just a hypothetical thing. Let's say I am going to get, let's say this 10 lakhs, what I am keeping at corpus today, a capital, let's say, my hard and saved money. That money I am going to get 20 lakhs, let's say, after even 10 years. So this calculation is clear. Because of my requirement, that's what I told you. What will be your requirement? That you have to fix it. when will be the requirement, let's say after 5 years, after 10 years, that you have to fix it first. Based on that one you can keep this money. Now the question here is the last part, is my 10 lakhs is going to give me the 20 lakhs exactly on a current 7% 8% rate of interest? If I tell you, it is not going to happen. I'll tell you why. Because when you are going to take your capital money also, even though with interest on let's say 2033, you have to pay a tax on that time when tax slab. So let's say I'm just giving again you a basic understanding of the tax, because taxation I'm not going to discuss details about the taxation over here. That will be a separate discussion. So let's say my income, let's say, as you know, there will be even XYZ slab, and there will be 5%, 10%, 15%, 20%, 30%, right? Tax slab. So which income group I am coming, based on that one, my taxation will be calculated. So let's say I'm just giving an example. Let's say 10 lakhs, it will be 30%. So somebody is earning 10 lakhs, let's say they are in a bracket of 30%. If I talk about the old regime, let's say, just take an example. Am I right? So if I am going to get this 20 lakhs, out of this 20 lakhs, what will be the interest part? That is again taxable. And if it is coming, let's say, if it is more than 10 lakhs, so if I am coming, let's say, on the 30% bracket, and let's say of 20 lakhs, almost, let's say, I need to pay even 30% tax on the same, only on the interest part. So how much, let's say, if I calculate even almost, even I need to pay for not only tax, even I need to pay for the cess, and I need to all together, if I calculate even my tax, even my cess, all put together, if I calculate, then it will be almost even 40 to 50%, whatever even I am going to get the total amount. Almost, I think, not even 40 to 50%. I can say even almost even 20 to 30% I need to deduct. So if I am keeping today 10 lakhs, and if I am going to get even 20 lakhs, and if you take out even this 20 lakhs of 20% or 30%, so put together it will be around 14, 15 or 16 lakhs. I'm just giving a hypothetical scenario. Is it your commitment is going to happen? The answer is no. Because what I told you, you might be thinking I am looking for 20 lakhs on 2023. Seeing that and keeping that commitment in my mind, today I am going to invest even 10 lakhs and that 10 lakhs is going to give me 20 lakhs. The answer is no. Why? Because I told you how this capital will be calculated based on your interest, and based on that one you need to pay the interest on that, I mean that income tax, based on that even interest also. So put together 20-30% if I look out, including my income tax and cess, so almost I'm going to lose even 20 to 30% of my money. So almost 20 lakhs of that, 20 to 30% if I take out, around 14, 15, 16 lakhs I'll be getting, roughly I'm just telling you. Clear? Now the another very important part over here we need to understand, like this interest, again it is not in my control. I also understood the cons of this if I break even in between. But yeah, the positive thing is, as I told you, you know your money is saved for something purpose. You don't need to, if you're not even going to use this money, if you're not going to touch this money, then this is a good money, because this money, you know, for certain things you have kept already. Let's say if I'm planning for my some children education, marriage, whatever it is, as per this requirement, so I know this has already been done from my end, so one way it will be my satisfaction. So this is the pros and cons I already have told you. Now the last thing is, there could be even a question, even you might ask me even a question even in my chat box also, but I'll ask this question: how this FD rate, even it is fluctuating? There could be a question like, Kaushik, you were telling 1970 it was 20%, then today it is almost even slashing, even it will be slashing more. See, I'll tell you, the Reserve Bank of India, they are just what they do actually, they just reserve the money. They also have certain even CRR, we call it cash reserve ratio, right? And that controls the entire even country's even inflation as well as the cash flow. So that even decided by again Ministry of Finance, that is even again decided by Government of India. But a simple concept when this FD rate will go up, because sometimes you have gone last 2-3 years, if you have seen, like it has gone even up to even 6%, again it has gone up even 7%. So I'm just talking about this point, 6 to 7%, how again it is gone down, again it is gone up. Even there will be a lot of debate also. Some people will tell it will go further down, it will go even further up. So I'm not getting into all those debate now. I'm just giving you based on that one. Before you conclude on this debate, I'm just telling you how the FD interest will be controlled. When there is a more even cash required by RBI, that means a simple concept. I need money, I'm desperate to buy or get this money from any even financial institute. Am I right? Even whatever XYZ of interest. Simple. I need desperately money on my emergency or let's say any purpose. Same thing for RBI also. If they need to reserve the cash desperately, what they will do? They will take the public money itself, and that is all over the FD. So that time what they need to do? They need to offer the rate of interest is high. Then only you will invest, right? Otherwise nobody is going to invest. If I am done with my cash reserve ratio, or let's say currently I don't need, no need to even reserve any cash, so what will happen? Automatically the cash the rate of interest, automatically it will be slashed. So this is a simple concept. I don't want to get into other debate, right? If you want to know, you can also put me in the chat box. That definitely based on your question I can answer you. But this is all together the concept of entire even FD. As I told you how it works, what are the pros, what are the cons, what I need to plan. If I'm planning for 5 years, if I'm planning for 10 years, if I'm planning for even certain days, that is my term deposit, all this concept even I am clear. How my interest rate is fluctuating, 40-50 years, what is the interest rate, how is the interest rate, if I break, how it is going to affect on my FD, and how this interest also it is getting calculated, right? Hope it is helpful for you, and thanks for watching me. And any questions, anything, so I'll be expecting in the chat box, and from your end even any other questions, so please you can get in touch in my mail ID and my chat boxes. Thanks.